All right, y'all, back to work we go. Weekend's behind us. Time change is behind us. Hope you guys had a fantastic Halloween weekend. First week of November, one of my favorite months of the year. We always have a great month of November in our trade room, and we have a lot to cover tonight because we get some beautiful ranges on these charts right now. Now, I know ranges, they look kind of crazy. They can be tough at first. But believe me though, ranges, they tell us exactly where to find the biggest winners each day. So I want to cover that in more detail tonight, show you guys where to find the right entries for tomorrow. Most importantly, how to time the entries, how to time the exits. I'm going to cover the entire roadmap in tonight's video because I want to make sure you have a game plan. You know how to make some easy money on these range traps we're watching here for tomorrow. So charts are ready. Enough of the intro as always. Thanks for tuning in. I know that time change is always difficult that first day back. We'll push right on through this and get ready for what should be a profitable Tuesday session. S&P SPY ready to go tonight. NASDAQ triple Qs are ready. I have 3 clues on these charts telling me where I think the easy money is made tomorrow. The first clue is right here on the hourly time frame. I like to use the hourly chart, this 60-minute time frame, as a directional bias, and it's very clear to see that even though we are pulling back right now after that huge move higher we saw in October, it's pretty clear right now the buyers are still very much in control here of momentum. That's a directional filter for tomorrow. There's no major news tomorrow. Normally we talk news next up, but there's no major news for tomorrow. Let's go dive into the tick charts though, because the time chart, the hourly chart is good for direction. I like to use these tick charts for entry timing. All the time frames, by the way, upper left-hand corner there. That is a 7,000 tick chart. And the only indicator that I use to find repeatable winning trades each morning in our trade room is the 21 EMA, that yellow line right there in case you're tuning in for the first time. There's 2 more important clues here on this tick chart right now. One clue is that range right in the middle. Now, what do ranges do? They like to rotate, right? They rotate up, down, down. They rotate back and forth. And because we are an overall bullish market, I love to look for bear traps around the edges of that range. Also, too, because we're overall bullish, these ranges, they're more likely now to break out and run higher. We'll talk about that more detail here as we go. But one of my favorite clues, what might be the most important clue, are these strong moves we saw. One strong move we saw down today, another strong move we saw, what was that, late on Friday morning, early Friday afternoon. Now, why would a strong move be a big clue? Well, because in a bullish market overall, a strong move down says expect a retest of that low before we go out and resume the overall bullish trend. So I said earlier, these ranges right now, they really tell us where the best money is made tomorrow. And I would imagine a lot of buyers will be looking to buy up those dips right now below that 49, below 41. I'm going to cover the NASDAQ in a moment too, because a bunch of levels in the NASDAQ too we're watching for tomorrow as well. So if we understand that we're bullish overall, this range wants to rotate back and forth like this, and those strong moves are kind of like psychological magnets or unfinished business. I think it's pretty easy to see right now. One of my favorite trades for tomorrow is I would love to rip this thing lower, take out some of these strong moves, get down around the edges of the ranges. You know, this is one thing we talk about a lot in our trade room. The money is made around the edges of the range, right? So the edge low, the edge high, this really is where our best entries and exits are going to come from. I do want to talk about this area right there because we may have that channel right there I had on earlier. So we'll talk about that here in a moment. But first things first though, if the trading gods are watching down on us tomorrow morning, we'll see a nice strong rundown. How strong? Strong enough to make it feel like it's a breakout, because we know that ranges like to rotate, right? And the edges are where the money is made. So this would not be a good spot to start selling, right? You wouldn't want to sell at support below a range in a bull market, right? So yeah, not a good place to sell. Great place for a bear trap. Now, bear traps, very simple. As it pulls back to that 21 EMA, let those bears try twice. Now, I covered this in a lot more detail in our free video course, but we call these 2-try bear traps. Now, why 2 tries? Because then I know exactly where those sellers are in pain. I know exactly where their stop losses will be just above that high. What I can do is I can buy into their stops, squeeze those stops. What I'll do is this. I'm going to take a quick 1-to-1 first target, get rid of that risk, and then as this market now tries to rotate back higher again, I'm going to look for ways to add to my winner. Now, adding to my winner, very simple. Separation off the moving average. Higher high in price. I'm going to get in right below that low. In my trade room, we call this a 2-try bear trap. Trap the bears in, and an add-on trade. Adding into that winner as it rotates up off the low and tries to what? And tries to take out the other edge, right? Edge to edge, edge to edge. We call these range traps in our trade room, right? These kind of range edge traps. Now, here's a common problem. Every once in a while, we don't get that bear trap down there. Every once in a while, what happens is it'll run lower. There'll be so many buyers down here, it'll just whoop and run right back up again. So sometimes we don't get that bear trap down there. If it V-bottoms hard off that low, what I'll do is, well, 2 things. 1, I'm not going to chase after it because your patience is rewarded on trades like these. 2, find a channel. Draw it backwards off the highs. Bring it down off that low. And the trick to this is look left and find a prior swing. Where the money is made most frequently is off the first touch of the low of that channel, right? Want to get off the first touch and right below that swing. Now, if you're a student of mine, you know we love to get below that 21 EMA, trap those bears in once and twice, and use their stops to squeeze that run going higher. And really any of the entry patterns you guys are learning inside that free video course can be applied off that. Again, we call it the first test is the best test off that low. Could be a 2-try bear trap, could be a pullback add-on strength trade. Again, that will make a lot more sense once you guys dig through my free video course on our website, which reminds me, by the way, I know that most folks watching right now, you guys know these entry patterns already, but if you're watching for the first time right now, this might be a brand new strategy for you. What are range rotations? How do we time bear traps, bull traps? Don't you worry though, guys. I teach this in a lot more detail in my free trading course. In fact, I have a ton of examples on the website for free where I break down all these different entry tactics I'm talking about right now. The bottom line is, guys, the markets are way too good right now not to be making profit. So what I'll do is I'll put a link up top here for you. Hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. More importantly though, let's face it, we make our money by timing good entries, don't we? So in that free video lesson, I want to teach you my 4 favorite entry setups so you can time better entries, get your confidence back, get your P&L back in the green again. Guys, again, if you're missing the best entries right now, if you've lost your confidence in your current strategy, hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I share in that short video series. The best part is it's completely free for you. Be aware too, guys, I'm going to put all the important links you'll need to grab that free video course, learn the roadmap. I'll put everything down below tonight's video in the description of the YouTube video. Start first on that free video course. Most folks start making money all on their own, all from that free video class. Start there first, get your charts right, get your mind right each day, start making money on your own. And don't forget too, I post a ton of charts and videos in between these YouTube videos on my X feed, on the X platform, formerly Twitter platform. If If you're on the X platform, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more. I'll put that below tonight's video in the description of the YouTube video. All right, so now you know, if you're here for the first time, now you know where to go to get a deeper dive into the roadmap I'm talking about. And again, a lot of trade examples I include on the website. You can see how these trades really play out here. Now, question for you, right? Question for you. We talked about running down and buying a bear trap down there. Is it possible that we might get, because again, a strong run down wants to retest, right? Before we resume the overall trend. Is it possible that we might see a strong run down, a bear trap down here? Is it possible we might have a strong move, a bear trap that pops up, and then is it possible that that strong move there also wants to retest that low again? Could we do it again? Oh, you better believe we can. In fact, these retest trades are some of our favorites in our trade room. We see these a couple times a week where we'll run down, get outside the edges of the trading range, get an easy bear trap, a nice easy 1-to-1, but we don't keep ripping, right? It rolls back over, it stops me out at my point of entry, and we find ourselves in a very, well, what might be scary situation, right? Because this, when I was a rookie trader, this would always feel like a reversal, right? Wouldn't it? But it's not a reversal. Remember, it's a bull market overall on the hourly time frame. One thing we always talk about in our trade room is don't let the tick chart confuse you for direction. Okay, this is the lower time frame, right? So nothing on this tick chart would tell me that it's a full bearish reversal. We have to go back to the hourly time frame and see a major correction here on the hourly time frame before we'll start thinking this is a bearish market overall. So this will feel very bearish. It will feel very uncomfortable. But as we always joke around with our trade room is the best entries are always the scariest, right? The best ones are always the scariest. So when all the rookie traders are drinking the Kool-Aid, watching CNBC, this time it's different. It's probably not different. It's simply a retest trade. They may take it a bit lower, fill that gap from a few weeks ago. We know there's a lot of psychological levels here if you're watching last week's video. So retest trade. Once they go back and retest that low, imagine strong run down, they retest. It's going to feel very bearish, but that is the last place you want to be selling in an overall bull market, especially if they can fill that gap down below. So trap those bears in, squeeze those stops. A lot of examples of these two try bear traps in that free video course I mentioned earlier. And the final step now is add to your winner, shallow pullback, higher high in price, and whatever you do, let that sucker run, because now we know where is it trying to get to. It's trying to go to the edges, right, of that range on the opposite side there. Boy, I love that game plan. Now, I want to talk NASDAQ here in a moment because the NASDAQ's a little bit different than the S&P. But I mentioned earlier, there's a channel on there, right? There's a channel right there. Now, this could be an edge, right? Couldn't that be an edge around that range? Couldn't this be an edge around that range? It definitely could. So could I buy off that channel right now? Well, what's my problem? My problem is I still have that unfinished business, right? That strong move is still, those strong moves back there, there's still a bullseye there for those bears. How could I buy right here though? I'd have to look for what is called a technical bear trap. And the reason why I say that is because it's location. Location isn't that great. So if all we see is a shallow pullback, I don't hate the idea of buying below 68 3/4, 64.5 level. If I had to guess right now, I would guess below that 64.5 level because that was the first low we saw. Oftentimes the first pullback, the low of that first pullback, that's the one that tends to be the one that buyers will come in and buy below. Now, I'm not going to blindly buy down there. What I'd like to do though is, if I can see that 64-ish area hold there, I'm going to wait and see if I can get some bears trapped in here and look for a slight variation of that 2-try bear trap I mentioned earlier. I still want to see 2 tries here, but the goal will be to get in underneath a swing. Okay, it's the most important thing you need to be aware of in this area right here. Because again, the bears are going to be hunting for retesting those edges of that trading range, right? So let's let them try once, let them try twice. I'm going to get underneath that low, that strong green candle closing back above the moving average. We're in for that 1-to-1 target. Get rid of that risk quickly. Leave a target, obviously, the other edge, the big edge overhead here, because you know where they want to go, right? They want to rotate the sucker off of that low. So as we say in our trade room, shallow pullback, got to be a technical bear trap, right? A deeper pullback, now I'm not so worried about being in bad location. I can be a lot more aggressive with your typical 2-try bear trap pattern like I teach in the free video class, right? Does that make sense, right? So shallow pullbacks, I want to buy as low as I can, right? Get in under swings. Deeper pullbacks, I can buy relatively high there because again, it's a much better location. I can trap those bears in. Time will tell on that, but that's my game plan though as we go lower. What if we go higher though? I mean, what if this thing bounces and starts to rip and run higher here? That's a really good question. Let's go answer that question right now over on the NASDAQ. Now, again, on the hourly time frame, this is used for our overall direction. You can see right away, we are going a bit lower here right now. They got that big gap that's still trying to work their way down. But until we see a really dramatic move going lower here, I mean, this thing was so bullish here for most of October, well, the whole entire October, right? So it makes it's no surprise. This is basically a healthy correction we're getting here right now. So step one is direction is here on the hourly time frame. Now, before we dive in and talk tick charts here, if you're enjoying tonight's video, please help me grow this channel, will you? By hitting that like button. Make sure you subscribe. I know we're all busy people these days. I appreciate you all tuning in and watching my videos. I do. So thank you guys so much for the likes, all the subs, all the ongoing support, all the love I get in the comment section below. Thank you all so much for being here and watching tonight. Now, enough chit chat here. Let's dive in and talk about the NASDAQ right now. Now, NASDAQ has a couple different wrinkles. One big clue in the NASDAQ is that range right there, right? Now, that range likes to rotate, doesn't it? So, the amount above the range, the amount below the range. What did we say earlier? In range markets, the money is made around the edges, right? That's a very obvious edge down there around 25,888. And of course, the counterpart up top there, 26,266 right now. That is where the best money is made. We call the middle the messy middle, right? Don't be messing around in the messy middle, right? Get out of that range. And again, ranges love to rotate, so down, up, and back from there. Are you seeing that other range though? There's a little tiny range right there, right, from Friday afternoon. That was not easy to see. We go down, up, down. Yeah, that's a range right there. Why is that range important? Well, because whenever we see a range breakout, we know we love to get those breakout pullbacks right there, right? So I'll tell you, that really puts a lot of emphasis on that edge, that 967 even-ish, right? That edge, and of course that gap below us is begging filled there as well. That is a strong move too. Look at that strong move right there. Strong move. What strong move wants to retest off of that low? Strong move there too, right? That's a pretty strong move right there. Strong moves want to retest. So it's really quite obvious right now. The best entries, the best exits, remember the edges, right? Write that down, memorize that. This will help you avoid a ton of trouble in trading. Focus on the edges. Now, we mentioned this earlier on the S&P, right? As we run lower here, really anything below that 967 level, because you get the breakout pullback zone there, that low, that edge, that strong move down right there. I would love to get us right now. Let this thing really cook going lower here. Make it real aggressive, right? That way it feels like a reversal, and we can use that same 2 try, bear trap, and run right back up into that range again. All the same tactics we mentioned earlier on the S&P can be applied down there, right? It could be a V bottom. If it bounces hard off of that low, we're going to find that V bottom, find that channel, mark off those lows, right? Don't forget, first test is the best test off of that channel. Again, a run lower, a retest trade. Retest trades are always top of our list in our trade room. It's an easy way to double our profits tomorrow as well. And remember too, if all we see is a shallow pullback, if it bounces, for example, off of that 15 level and we start going higher here, yeah, the game plan is very specific, right? If all we see is a shallow pullback right now, the game plan is get in below prior swings. That's the most important thing on a shallow pullback, right? Get in below prior swings, most important thing. And keep in mind too, if we start going higher here right now, right? And we're bullish overall on the higher time frame. If we start going higher here right now, we now ultimately start thinking about a breakout pullback off of that trading range, right? That is ultimately what the goal is now if we see a move going higher. Now, this could be a rip off of that low. It could be simply a bear trap below that low. But now let's imagine now we find our way going higher here. When I find my way going higher, I always start looking for that initial entry with separation off the moving average. Now, again, this is where it's important to remember the higher time frame direction, right? We don't just, we lean on that hourly time frame. So as we're going higher here, I'm not as interested in selling off the high right now. Why? Because we're bullish overall. What I'd rather do is look for some separation off the moving average, get a higher high in price, and look for a way to take some nibbles going long up here, right? Let those bears try to short this thing and buy right into those stop losses. Again, we're bullish overall. Now, like we always say, whenever we see a range breakout, what we do is we measure the breakout leg is the measuring leg, right? The breakout leg is the measuring leg. So the breakout leg then creates the measuring leg that will now tell us where to take our profit target on that move going higher. Now what we do is look left. Now what was overhead resistance now becomes a great spot now for what? For a breakout pullback zone right there. Now breakout pullbacks are very common. They almost always make a two-legged pullback. Now, two-legged pullback, think about a measured move, right? A, B, C, D. And like always, right when it feels like this market now is reversing, this is nothing more than a breakout pullback off that range. We're going to mark up that moving average, bears once, bears twice, that same bear trap, that same add-on trade. We do it over and over and over again. And you will too. Once you learn what works, you'll keep pushing this button. You'll keep milking that cow, right? Just like we do each morning in our trade room. So on a breakout pullback, it's a nibble. It's a small position on the first one, right? It's a two-legged pullback. This is where the full size position goes on, right? The breakout pullback off that trading range, right? These are very high percentage trades here. If we can get a nice strong breakout going higher, it's a nibble. It's a full size trade, right? It's a two-legged pullback, bear trap, add on. The target, of course, is always what? It's always back up to retest the high. So leave that runner, right? Leave that runner. Now, don't forget too, we talked about this a bit last week, towards the end of the week last week, bookend ranges. We oftentimes will see price go lower, tag a range right there, run up, make a new range up here. What if we ended up popping higher here and went into another range up here? Would that be surprising to you? It shouldn't be surprising. No, right? Government shutdown continues, right? Shouldn't be surprising at all. If we go into a range up here, okay, we call these stacked ranges in our trade room. What happens is the previous range is now a breakout pullback, right? And the most recent range, right? The most recent range, that range now wants to rotate, right? The amount below and the amount above. That makes sense, right? Okay. So if we pop it up higher here, if we start seeing a range form up here, now all we do is we wait. We wait for a pullback. Again, I'm going to use what was resistance here as support. I'm going to use that 21 EMA as my guide. And again, I'm not going to blindly buy this because it might keep going a bit lower. It may really shoot going lower there pretty good. But once it starts pulling back to that moving average though, once we pull back to the moving average, we're not looking to short that, right? Because again, that range right there is going to want to rotate going higher. So we trap the bears in, and we're going to use those stop losses to fuel that move going higher. Because if you're caught short and you get stopped at a short trade, what happens, right? You buy your way out of that position. It's that same two-try bear trap. It's that same add-on, and we measure the amount below. We let that sucker run. Bear trap, add-on, and you know where that market wants to go now because we know that ranges, yes, they love to rotate. Now, one final question though. How would I sell this thing if we go higher here? What's the one pattern we look for to short off the top? Well, it must be a more cautious entry pattern, right? Because we're overall bullish on the higher time frame. It has to be a crown reversal pattern, right? That's a bull trap. It's buyers once, it's buyers twice, and the most important thing is I have to be selling above a prior high. Always has to be above a prior high here. So if we do find our way up here and we're not getting that big breakout I mentioned earlier, if I start seeing buyers try once, buyers try twice up there, get above that high, that is the short I'm looking for. Short off that high, run it lower, trap the bears in, and squeeze those stops right back up again. Make sure you notice though, it's a more cautious entry above the highs there on the crown reversal. It's a two-try bear trap like we saw late in the day on Friday, right? They run down, bears once, bears twice. We're simply buying into those stop losses right around the edges of that trading range. It looks like bears though are taking this thing going lower here overnight. Look at those edges. Keep an eye on those bear traps, and we'll play this out tomorrow morning in the trade room at 8 o'clock Eastern time, which reminds me, the place to be tomorrow morning, 8 o'clock Eastern time. Guys, the fastest way to make repeatable profits is to learn and trade along every morning with us at the opening bell. I'll put all the important links you guys need to get started, to learn the entire roadmap. I'll put that below tonight's video. Start there first on that free video course. You're going to love all those trade examples I include on that short video series. Then come join the trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other. Get some sleep, will ya? And I'll see you guys same time, same place tomorrow night. Adios, amigos. Bye for now.